Money versus credit. What's the difference? Welcome to Money in Good Sense. Almost the entire economy consists of transactions. A transaction is the exchange of money or credit for a product, a service, or a financial asset, such as a stock or a house. Both money and credit can be used to make transactions possible, yet they are two very different things. In this video, I will explain what money is, what credit is, why credit is so important to our economy, and why not every debt is a good debt. Money and credit. Money is used to complete a transaction immediately. You pay and the purchase is complete. Credit is used to complete a transaction at a later point in time. Until then, a debt remains. You can therefore think of credit as delayed payment, recorded as a debt. That debt has a different meaning for each party. For the borrower, the debt represents value. After all, they have already received a house, a car, or another product. For the lender, that same debt represents a risk. If the loan is not repaid, the lender suffers a loss. Once the debt has fully been repaid, both the credit and the debt disappear. At that moment, the transaction is finally complete. The bank and the central bank. Because creating debt is very easy, think for example of buying someone a beer on credit, things can quickly become difficult to keep track of. That is why a third party is usually involved. The bank or lender provides the credit and manages the debt. The central bank then plays a different role. It tries to influence the amount of credit in the economy through monetary policy. One of its most important tools is the interest rate. When debt in the economy grows too quickly, the central bank can raise interest rates. As a result, borrowing becomes more expensive and repaying debt becomes more attractive. When the economy slows down, interest rates can be lowered again. Credit then becomes cheaper and more widely available. Why does credit exist? But why does credit exist at all? Why don't we simply wait for everyone to have saved enough money? The answer is simple. Credit makes investment possible that people would otherwise only be able to make much later, or perhaps never at all. As a result, they can increase their productivity and ultimately improve their standard of living. A simple example. Suppose someone borrows money to get an education. Thanks to that education, they can get a better job. With that higher income, they can repay the loan. After repaying the loan, they are left with a higher income than before the investment. The loan has therefore improved their standard of living. If someone could never save enough money, they would, without credit, remain stuck in their current situation. The same is true for business. A farmer may only be able to cultivate 10 hectares of land. If, with the help of a loan, he buys a tractor, he can produce more, sell more, and eventually repay the loan. Here too, credit makes economic growth possible. But not every debt is wise. This brings us to an important distinction. Not all debts are the same. A loan that allows you to earn more or become more productive in the future can be seen as an investment. A loan that is used only for consumption is something entirely different. For example, if you buy a television on credit, that television usually does not generate any additional income. In the end, you actually pay more for the same product because of interest. In that situation, saving is often wiser than borrowing. Conclusion. Money and credit may seem very similar, yet there's one important difference. Money completes a transaction immediately. Credit postpones the payment and makes investment possible that can increase our prosperity. But credit also comes with responsibility. A wise loan can improve your standard of living. An unwise loan can become a burden instead. However, there is still one important question we have not answered. What is money exactly? Why does a 20 euro banknote or a $20 banknote actually have value? And why does almost everyone accept that same banknote as payment? We will look at that in our next video. For now, thank you for watching, and as always, don't worry too much. Everything can be overcome with study and patience.